Hello, I'm Alex Davies, founder of Wealth Club, and today I'm with Ian Warwick, managing partner of Deepbridge. Hello, Ian. First, can you just tell me a little bit about Deepbridge, who you are?
Yes, so Deepbridge was founded by myself almost 7 years ago now after a career running NASDAQ-listed companies in the US. On my return to the UK, I decided to use my skill set and that of other individuals I'd worked with in those years to work with a number of companies instead of one or two. So we launched Deepbridge Capital with that end. And initially we decided to build a SICAV structure in Luxembourg, but very quickly it became apparent that that was not the right structure for this kind of investor. And we were introduced to the EIS marketplace, and hence that's where Deepbridge came from and where we are today.
Okay, so just tell me about your growth EIS fund. What's the aim for investors?
So the Technology Growth EIS was our first product, and the aim was to introduce investors to later stage technology companies, particularly where the IP was developed, therefore mitigating as much risk as possible for those investors by investing later and utilising our team.
And why would you say you're well placed to do this?
Combined experience of over 200 years in the team. The team itself, the vast majority of the key players in the team have come from industry, not from fund management. We do have the fund management people in-house, but the key people have been at the sharp end of finding, building, growing and exiting technology companies for in excess of 30 or 40 years.
Okay, so let's just talk about the investments. What are you looking for in this company?
We have a very specific criteria that we look for in companies, in that the companies must have global scalability, they must have the ability to move into multiple vertical markets, they must be disruptive in nature, in that they must be either creating a new market or substantially disrupting an existing market. The management must have skin in the game. The company must have whilst we can't have a predefined exit, we need to have a pretty good idea of if we do everything we should do with the company over the long term, we have a good idea on who may buy or the possibility of listing a company.
And how do you go about finding these companies?
The companies come to us in a variety of ways. We're quite proactive in that sometimes we'll identify a gap in an industry sector and we will go out and seek companies, but we work hand in glove with the likes of Scottish Enterprise, the Welsh Development Agency. We have a gentleman over in the States who looks for opportunities in both Silicon Valley and Silicon Forest, and we have a chap over in Australia who looks for opportunities in Asia, and we would bring those companies to the UK and incubate them in our own facility and then invest in them and grow them from that position.
So let's just take a look at some of your recent investments. Perhaps you could give me a few examples and explain why you invested in those particular companies.
Yeah, so we specifically look for companies whereby the team of Deepbridge Capital have sector experience, so we don't go outside our own boundaries. Some of the companies we've invested in recently, a good example would be Sky Medical Technology. So we've been investing in Sky for a number of years, and Sky Medical developed a device to prevent DVT. We particularly like this company because it had multiple vertical possibilities, both for DVT, for wound healing, for diabetic ulcers, and many other areas, so therefore enabling a much better valuation. Taking that company through multiple stages of funding, being hands-on with the company, and that's now reached a point where it's now selling globally. It's approved by the FDA in North America, and ultimately we're looking for a pretty substantial exit from that company. Another good example would be a company based down in Kent called Algicites, and Algicites produces omega-3 from freshwater algae. The driver for that was the team were very, very highly qualified in what they did. We had the ability to influence them in terms of building the company out so it could be globalized, but more interestingly, they were operating in a sector which was non-sustainable, in that omega-3 at the moment comes from a non-sustainable resource. And globally, there was about 160,000 tonne shortfall of omega-3. It retails for somewhere between 550 and 700,000 pounds a tonne. So a very big imperative for that company to be successful. And we've just now moved into commercialising that product. So very exciting business.
Okay, so at the moment we're hearing about a lot of you read the papers, etc. A huge amount of money going into the sort of deals you invest in. Is it a bubble? Do you feel as though you're getting in at a good valuation?
I think the interesting point is, even though we invest quite late in our tech growth, the interesting point is that these companies are very firmly what in America they would term as the valley of death. What that means is it's very difficult to raise funds in that. It's easy to get the early stage funds of friends and family, remortgage your house, do different things. But when you're trying to raise that 1 million to 10 million, maybe a little more than that, there's not many people operate in that space. So we very firmly operate in that space, whether it's, we call it the funding gap. That gives us the ability to still command a decent piece of the company when we invest at that stage, albeit that they are much later down the development path.
When I invest in an EIS, I'm obviously want a profit, but I also want my money back, and I want it back quite quickly. What would you say the time frame of a lot of these investments are?
Well, I think first and foremost what I would say is that Deepbridge operate completely and totally to the spirit of EIS, in that we operate in a sector whereby those timeframes could be anything from 3 years to 7 years, particularly if a company has the word medical in it. It's going to take longer because you need regulatory approvals on a global basis to achieve that. What we have seen historically is where investors have been investing for 3 years and a day and getting 105 times their money back. That is not what we do, nor is it where the likelihood that the government is going to push this product. We operate in true investing. We operate in sectors whereby they are technology driven or life science driven. Primarily, we're looking for more substantial investment returns than the 105 that they've seen historically. Sometimes, the immortal words of Warren Buffett, you have to be patient.
Risky stuff, this. What would you expect in your portfolio? So if I invest this year, how many companies would I get typically? And
typically you would get 4 to 6 companies.
And what would you expect? A number of those to fail, a number of those to do well?
I would hope that we have done our due diligence to such a degree, and that we fund the company correctly as it should be, and that we are unlikely to see any major failures in our portfolio. The likelihood that some of them may not achieve what we wanted them to achieve is possible, but across a portfolio of 4 to 6, at the moment, and within our current portfolio, we have seen no failures. Some companies have slightly changed tack and moved into different areas, but that comes back again to what we say. It's very important to have the understanding of how a business grows and builds, and the hands-on approach, so we get no surprises.
So I appreciate Deepbridge hasn't been around for a particularly long time, but have you had any exits?
So in our careers, a number of individuals within the Deepbridge management team have had substantial exits. My last company, if you'd invested with me in my rights issue at 6 cents, you would have first exited at $1.60. A number of investors didn't exit at that point, and they're still in today, and the shares are at $6.80. So
a considerable return.
That's a good return investment. Professor Chris Wood, his company BioEnvision, the first investors came in at 32 cents. And the peak share price was $12.32, and people had free trading stock. So if they chose to exit at that point, it was quite a substantial exit as well. Within the Deepbridge EIS portfolio, we've literally just had a partial exit whereby a number of early stage shareholders were offered an exit by one of the board members who'd seen the product at work in Canada. And those investors who invested at between 35 pence and 90 pence were offered 185, and it was oversubscribed for the exit. But a high degree of investors have chosen to stay in because we believe there's still substantial value in that business.
Thank you for that. I'm going to invest in a few EIS this year. Why should I invest in yours?
I think fundamentally Deepbridge believes that it's more important to have sector experience than be a fund manager in the true sense of the word. We are transparent, we report regularly to the investors, we are aligned with the investor in that whilst we don't charge the investor to invest in a company, we do receive fees from the investee company which pays our bills, but ultimately we don't make money unless we create an exit. That makes us very, very focused at the beginning to make sure that we invest in the right kind of company. We take a hands-on approach to it. We work with the companies month by month. We don't want any surprises, but the main thing is this is what we do. This is what gets us excited, and this is all we've done for the last 30 years.
Well, thanks very much, Ian Warwick from Deepbridge.
Thank you.